And it's basically the moment a strategy works, the market can copy it, right?
Yeah. Yeah, it's so easy you have these tokenized vaults on chain in which the manager is submitting orders from off chain, but the transaction on chain is real time transparent to everyone else. It's trivial to build a smart contract that's monitoring the tokenized fund smart contract and just execute the same trade one block after into another tokenized fund, bypassing the fees.
This is Money Never Sleeps. Sharp riffs, big ideas, and real insights from smart people. I'm Pete Townsend. Let's go.
Money never sleeps, pal.
So joining the show today is Matteo Manzi, co-founder and CEO of Orion Finance, providing on-chain portfolio management infrastructure designed for privacy, compliance, and verifiability. Welcome to the show, Matteo.
Thanks for having me.
Awesome. Listen, it was great to meet you in person in Amsterdam at the Techstars Demo Day after all the mentoring calls that we did last year. When you went on stage that day, you said something that stuck with me, and I think it stuck with a lot of people in the crowd as well. Transparency equals liability. So, what do you mean when you say transparency equals liability?
Yeah, sure. Well, I have to say that the value proposition of Orion came from the realization that the on-chain asset management market was maturing. It was starting to be able to not only define on-chain products for financial market, but also to actively manage products on-chain. However, we noticed this contradiction in the fact that managers have alpha. Financial markets, we talk about alpha when we talk about information asymmetry or in general IP asymmetry. And because of this asymmetry, they have a business model that is based on charging management and performance fee. Now, the blockchain promise has been transparency since day one. I would say has been verifiability more than transparency. So because of the only way we had before the technology was mature was full transparency to enable verifiability, we took for granted that in order to interact with tokenized portfolios on chain, one needed to be in plain sight of everyone else. Imagine being at a poker table, playing a game of poker, and you need to bet on your cards. Okay, but you can see everyone else's cards, and everyone can see yours. How can you make an intelligent bet? How can you play the game? So that's another way of thinking about it. That's why for asset managers, full transparency is a big blocker. And it's not an accident, I believe, that as institutional adoption starts to rise towards public blockchains in general, the focus on privacy starts to become, again, the center of attention for crypto.
Absolutely. Absolutely. And it's basically the moment a strategy works, the market can copy it, right?
Yeah. Yeah, it's so easy to, you have these tokenized vaults on chain in which the manager is submitting orders from off chain. So the IP is off chain, the orders are generated off chain, but the transaction on chain is real time transparent to everyone else. And so it's trivial to build a smart contract that's monitoring the tokenized fund smart contract and just execute the same trade one block after into another tokenized fund, bypassing the fees.
Yeah, absolutely, which is where the space is headed, right? We've had hedge fund algorithms for years that are running program trading that will continue to run at the speed of light. But when you're able to move just everyday strategies and more plain vanilla strategies on chain, that you want to be able to do this with a degree of, well, not transparency, but privacy. What are you building to address this?
Yeah, so we are building the first multi-pod shop in DeFi for asset management. So it's a multi-strategy setup that enables managers to tokenize their strategies, so their alpha-driven strategies. And being a multi-pod, we are able to preserve the confidentiality of the alpha driving the allocation. The way we do this is partnering with Zama on integrating advances in cryptography. There are two fields that run in parallel. We use both of them. One is zero knowledge, one is fully homomorphic encryption. And with zero knowledge, we are able to scale the system computationally by proving off-chain compute to the on-chain system. And so kind of in the spirit of ZK rollups in the Ethereum ecosystem for more technical listeners. And FHE, which is really magic the first time you hear about it, which is this technology that enables you to do mathematics on encrypted numbers. And so using FHE, we are able to have vaults, which are like this tokenized, you can imagine them as tokenized funds. It's one case of using vaults. By having their NAV, so their share price, evolve based on some logic, we can have the logic be encrypted using FHEVM. which is this protocol built on the FHE technology. And then it's like, again, the analogy of the poker game. Everyone is playing their cards. They put the chips on the cards, but they're hidden. And now, before doing the rebalancing, we put all the cards together, we shuffle them, and then we can look at them. And now, looking at them, we can associate the specific hand to the specific bet. And so in this way, we protect the alpha of the specific manager while maintaining the ability to interact with the today at least, fully composable, transparent DeFi market. So at a certain point, we need to bring back the positions to transparency. If that makes sense.
You do. Yeah, it's intense. It's intense. And it's thinking about when you look at the billions, if not trillions of transactions a day, they're going through TradFi rails in general, which are entirely private, that moving it on chain means that, you want to be able to carry over that privacy with you when it comes to asset management structures. The best example of this that I had from my days in the hedge fund market was Millennium, the big multi-pod hedge fund. And that I remember sitting down with them to try to figure out one of their settlement strategies around the trading that they were doing. And there was this concept of, hey, listen, we got 100 different groups of traders that are called pods that are following different strategies, and they're trading every day. But sometimes one may take one position on a repo or repurchase agreement, and someone may take another position, opposite position, on that same underlying instrument for the repo. And well, for trading efficiency purposes, you don't want both of those trades to hit the market. You want to cross them. But at the same time, for the purposes of preserving the alpha of these strategies or the risk-adjusted return of these strategies, you don't want each pod to know what the other one is doing. So when we first met back in August, actually it was probably July before we did Techstars, you said Millennium Onchain, right? Yep. And that kind of nailed it for me because I had that strong reference point. For those that may not be as deeply involved into this DeFi space as you, can you tell us what Millennium Onchain really does mean?
It also hit a nerve for me when talking to Millennium back in 21, I think, something like that. Because the system they managed to set up, and in general, Millennium is one example, the multi-strategy setup in asset management, managed to set up not just the way to harness alpha, but a system to create economies of scale when it comes to execution, operations, and also, higher level questions about how to allocate capital across pods. As well, talking to them about this concept of netting was very fascinating. So being able to think about, again, economies of scale that plays a role in the world of DeFi, not just because of market orders efficiency, but also because of reduced gas fees. You also democratize that by netting trades. And so the idea is very simple. It's, again, being able to, in the DeFi space, people talk about coincidence of wants. So I want something that someone else has. I want to buy 3 shares of Tesla, and someone else wants to sell 2 shares of Tesla and buy 2 of Apple. Okay, Apple, you may need to go to the count, wherever you want to buy that. But with Tesla, we can kind of exchange it directly. And by this bartering process, we can save in execution costs, slippage, because there's no real market impact affecting the price of the trade. And this is very powerful because it creates an economy of scale and an incentive for participants to behave within these systems rather than being small fishes in a big sea, if that makes sense. So you can still be a small fish, but within a big infrastructure that enables you to compete. So that's one free lunch you get out of this privacy-preserving system. You get privacy, but you also get capital efficiency because all of a sudden you don't need to buy and sell as much as you would do if you were a lonely strategist.
Is there also a benefit to doing non-privacy preserving strategies?
For sure. This applies regardless of the privacy layer built on top. Let's say that there is no information asymmetry. It's just a basket product built on top of an investment universe. So the S&P 500 is the most famous example. You have the US equity market. Okay, the logic is let's measure the market cap of these instruments. Let's pick the top 500. And then you do a weighted average of their returns. And all of a sudden you have the return of an object that doesn't exist in the individual stock components, but it's in some sense more real. So you can still think about tokenizing basket products and defining new cryptocurrency-based financial instruments that are defining basket allocations logics, which are fully driven by smart contracts as well. So the allocation is, again, this rule I just described on the S&P 500. You can do the same with on-chain vaults, and you can build funds of funds, vaults of vaults on-chain by measuring their TVL and then defining a new vault based on that.
That's where I get really excited about this stuff is expanding the concept, right, of the vaults to say that, well, there are tons of public equity strategies out there. Let's just focus on equity for a second. That where so many layers exist in the infrastructure of, hey, we're going to build this one passive strategy representing an index, and then we're going to package it up with 2 or 3 others to deliver a specific kind of return diversification. And we might put a future overlay on top of that, or an option overlay on top of that, or an FX overlay on top of that. And then we may do a fund of funds with that, with 2 other strategies we put together. You don't need all those additional layers when you have the vaults. You can just, these are composable vaults that you can piece together through the protocol, right?
Yeah. And at that point, you end up with a single token representing all this layered logic you presented. And then if you want to build an AMC, you want to securitize this instrument, you want to build an ETP on top of this single token, then it's operationally, it's a game.
Definitely. And why is this model emerging now?
So I would say one big component, maybe it's the biggest, is the regulatory maturity. We have FINMA led the way in Europe, at least. MiCA got things in place, the Genius Act, of course. So that's big. That's been a big driver of institutional adoption towards technology. The maturity of the technology is also a big subject. FHE was not really feasible computationally, and therefore gas-wise on the Ethereum blockchain since basically this last summer of 25. ZK in general, the zero-knowledge technology, also got extremely cheap. And so I would say these 2 things together are making the design space at the same time richer in terms of what can be done. At the same time, you have real demand also driven by the increasing volumes of stable coins and real-world assets coming on chain in being able to build on top of them a layer that's about actually managing these assets, not just about creating them.
Fascinating. And when Orion does work, Matteo, what does asset management look like in 5 years?
Yeah, so the good thing will be that traders won't need to know they're trading on a blockchain. So the abstraction of complexity has been a focus for us and for the industry overall in enabling traders to just connect to a broker, DeFi broker. To be able to have an interface that gives you paper trading facilities, to be able to have a sandbox environment to test strategies, and to deploy both actively managed and passive basket products that drive the TVL and that move capital into on-chain rails, making all of us benefit from the efficiency of this technology.
Absolutely. There's so much opportunity here and so much potential. Listen, Matteo, thank you for joining me today to talk through this and to tell us about Orion Finance and the opportunity here with building Millennium on-chain. What's the best way for people to get in touch with you and learn more about Orion?
Thank you. Just go to visit orionfinance.ai. You can find our contacts there, and just let's work together.
Awesome. Thank you so much, Matteo.
Thank you.
Money never sleeps, pal.